Hey guys, how are you? This is Bitcoin and it's the crypto sniper. You're on the 60-minute. Before I go any further, however, I'm going to just drop it down a little bit for you. We had a little HVF wind up here on Bitcoin, and we felt there was going to be another final pop to come out of the great coin. This is all discussed in our private Basecamp network, by the way, for our trader metamorphosis program, and on our WhatsApp group for keeping each other's heads up on all the developments. So yes, this is what we discussed. Isn't it interesting how there's usually a round number just below the access point? As you can see, subsequent to this particular pattern popping to the upside, and we'll do the draw for you now, axis is just marginally above that round number, because usually as you get to the end of the pattern it starts tipping its hand in the direction it's going. Anyway, with what we've got on the target here, you'll see how it did. This is, by the way, Poloniex, one of the largest volume, but it is against Tether, which is close enough but not exactly. And you can see that's where a number of the guys took off, and they're just real believers in HVF theory now. I can show you a couple of the WhatsApp posts post that. What did you get afterwards? Strong sell-off, weak attempt to get higher. This is in essence a rising wedge on the second attempt in a smaller time frame. And you can see it squeezing very low vol. What you get just before a very low vol period, you get expansion. So you get a proper slap down, which has now occurred. Now, for those that got out and moved into Tether, they got in at Tether at 4,447. And you know, that's some $117 away from where it is now. You save yourself a bit of a heartache. More generally though, let's just have a look at this, and I want to bring this all into perspective for you. More generally, we were expecting this, we are very close to that high, the previous all-time high, which is in and around here, we still haven't done 4.5 on poly, by the way. That's where we are. So remember, this is exchange specific, you get variations. 4,488 there, and that's 4,454. So, you know, we're coming in within $30. It's not even 1%, you know, it's 0.75% of all-time highs. Now, the thing I want to highlight about all of this is our default assumption with HVF method is that you're going to top out before that. In other words, we assume continuation and that you're in a bull market, that you're going to top out before that and put in a down leg. So this is going to get choppy, churn a bit. We're going to round the top and down. That's typically our default position. We are actually getting hammers, and it's pointing to probably a element of rally. Some people would have panicked sell on that collapse. I don't always suggest that personally, but if you're in the HVF, you would have got out really well, and that shows the value of targets. But I expect it'll still churn and no immediate. This is the first warning of possibly more, and then we might top around, and then we probably have some form of a down leg. However, the other two scenarios that I warn about is that when it comes to crypto and Bitcoin particularly, you don't get as big a down leg as you necessarily expect. For example, for our HVF method, we'd like a nice pullback somewhere down here. Sometimes they're quite small. You get a very small little setup here that is almost small in its own right, and then you just pop and pump from there. So to sell out of all your Bitcoins, it's dangerous because you might miss the next pump up. A couple of things to watch and observe about this, because many people, they just become entirely crypto focused and they don't observe what else is going on, and that can be to their detriment. We are historically FX traders as well. We understand the Forex market. And this was the dollar index, by the way. So that'll have a lot of euro in it, but it'll have other things in it as well. But bear in mind, the Swiss franc is also very, very, very tied to the euro and is in that index. So it's going to be a large percent euro, but it has other things, including the yen and the pound and etc., in varying degrees. So it's kind of a weighted basket, but it's not perfect. It doesn't have, for example, significant of the Chinese, and I don't think it has at all at the moment, but there'll be new measures to come. Now, my draw on this actually would have been initially, and this is an inverted setup, my first draw would have been like this. and the final high would have been over here. Why do I say that one and not the one before? Because the volatility started getting a lot wider. This was the last period of really low volatility. Look at this little funneling bit. So that actually meant that just before smashing down, as it did, it first did a little bit of a volatile look to the upside, and then got super volatile. So it went from extreme low volatility to super volatility. So in my view, that was your sell-off. So we've been in a downtrend for the dollar index. So the trend is down, and then we had this really squeezing part, and then we got really low vol, and in actually fact it went the wrong way, and you would have had your stop there. By the way, you wouldn't have been in this trade, because only when you break this level is it a break on your just in time entry. So it would have broken there. It did come and visit it again. It's probably worth dropping down into that time frame, that final little, I call this the triggering time frame. Very, very low vol here. Little kiss again, tweezer bottom, very, very low vol. You can see the volatility actually expanded from this point on, but it first went the wrong way, so this could be a bit of Fed. Kissed that line again and tried to rally again. It shows significance to that line. Dipped, went in, and there's the smash down and the trade. So in actual fact, for the draw, if I was arriving here, this is the draw I would have done, because the beginning of the expansion of the volatility is actually the twitchiness in the beginning of the reaction of the market, rather than choosing the idealized high. That would have been my third high and my third low, and this would have been the target. So as that ran there, it kind of shakes up the pattern a little bit, and then you would have triggered short. But if you came to the second chance and it's now triggered to the downside, and you see it going down here, could certainly have sold there. Despite that having shot through there and there, with FX you sometimes get what I call the look one way, go the other way candle. So this is the beginning of some volatility, and that's when it goes absolutely mental. And then you get that final capitulation selling. So why are we doing this, and why are we talking about Bitcoin in this? Well, Bitcoin, of course, is measured against the dollar. The other aspect is this gives you a target. And the key point here is this target right here, which was kissed and then run through, which is often the case with key levels of significance. That juncture that occurred, you can get the date, the time to the minute. It's literally 5 o'clock. This is on a British summertime computer. So that's 5 o'clock. If you go across to your Bitcoin, and you're going to need to drop it to a similar time frame, drop it down to 15 minutes, you can see something versus Bitcoin. You have a look here. There's your 1645. Whoopie-doo, there's your 5 o'clock. What came next? Smash down. So the correlation of your upside HVF in Bitcoin and your downside HVF in USD generally against the index. So you've got a much cleaner chart and pattern here, but you got that percentage move. So you could have been in. If you weren't already in Bitcoin, you should be holding. By the way, you get plenty of wind-ups. This initial burst that set up an HVF, there's another HVF right there for you on a smaller time frame. So you just have to get in the right side of trading the trend, you know. There's your low 1 to your low 2. There's your funneling inching up, and there's your breakout bar. And you can see it's accompanied by the first big volume, and then bigger again, and then really expansive volume. And that's usually when you start to get to top out. Falling wedge, rounded up, very symmetrical setup, very nice trade. And you could have been in it from here and trading over performance, and you could still have been in it all the way, and then you would have closed on that target. But yeah, just a small illustration there. Now the other thing that's a little bit interesting is that we have Bitcoin Cash, and Bitcoin Cash is at a slight tick up. Now this is on the hourly, not the 15-minute, but this is all largely a falling wedge. It actually, I don't think it's made lower lows than this low. It has slightly. I stand corrected, it has. So if I try and make this a horizontal line, that absolute low, you have dipped just through that key level over there. So it does qualify as a falling wedge. It's not a descending triangle. A descending triangle is a flat bottomed. It's actually, as I've drawn it there, you are lower here, and you are just dipping the line. So that means we've got a squeeze here, a squeeze going and a squeeze. Now we actually had a little bit of an uptick on BCC, just as Bitcoin. Not hugely, it has to be said. It's not hooray. But as this was falling, and you saw how the times coincided, literally the making of the two targets. Obviously there's a dollar component here, so that's why the DXY bottoming against euro is also going to be a point that it might be topping for Bitcoin against the dollar. But the point that becomes interesting here is, do you rotate into BCC? You're getting some hammers now here. By the way, you have a funnel level here, which is going to, you should always draw those. You'll learn all about this on an HVF method program and how we do 360-degree analysis. But a couple of tips and clues for you to see how we roll. And that's a level. Now that level's been run, and we might rally up against it, which means for this time frame that bullishness has now been underdone, but this level hasn't. So for the 15-minute, we've reverted in between bear, because we've run that. Are we going to rally? If we run this, then we've turned full bear, because all setups on the upside are being slowly undone. Their funnels have been run. Now, what about that BCC? Let's get it back onto the 15-minute. So I wanted to show you this whole nature of the squeeze. Remember, it's pumped really well, and it's also had HVFs along the way, which is why this is just simply the best strategy for trading. Especially expanding markets like the crypto markets, the perfect marriage of having a methodology to preserve your mindset and also having the market. It's all the M's, as I sometimes say. But let's go to the 15-minute and show you again. The interesting thing is that time, that was 5 o'clock British Summer Time, as you saw, 1700, should have been an interesting time again. If I point to that candle, where's the first one? That's a green candle. That's the first sign of some volatility off the base. Not huge, stirring, sells back off, and then a secondary pump. That was the second sell-off on Bitcoin. So Bitcoin sold off first, and then that was the second, the big one, the big capitulation. And that was 1930. So if you go and have a look at the second little pump candle, I would pretty much sure that would be 1930, and there it is, 1930. If you're looking down here, this black point. So just look below my cursor at the time. So it correlates, but this is not as proportionate in percentage terms an upside as the Bitcoin sell-off was a downside. So it's a little bit docile, and it's not giving you back as much as Bitcoin is giving away. So we need to watch it. But if it underperforms for a while and then decides to break out because it's a falling wedge, so typically those pop to the top, it could have a little dip out the bottom first. They often do that just to shake everybody out. Just like you saw in the FX, it first had a push higher, exhausted itself before it did the proper spill. So these often mislead people, and people just chase the first direction of movement and they get caught out and they get whiplashed. So remember, generally this should go up, but it can shake you out down first. And that's the nature of the game. So will Bitcoin Cash, is the question, become interesting for us again to the long side on a falling wedge upside break? This is HVF DNA. It's just falling. It's not holding. In other words, instead of having a horizontal line that's running through it and getting a symmetrical HVF, you actually have a falling wedge, slight with an angle that has got a selling and dissipating angle to it. But it can pop. It can sometimes return move, just like you get second chances, but it can pop, return move, and then go. So it could be interesting because it has been a bull and it has been resting for a while since that big high a number of days ago. So this was a very beneficial run for us. We got out of Neo and into that, so it was beautiful and very helpful. So we're keeping it in our watching remit, and we'll see. But there does seem to be a bit of protection around 14. When it dips at the 14s, it comes. So what you might find is the miners have to assess where they put their effort, and this is a critical point where it starts to represent value again to do, I suppose, maybe more work. And I don't fully get all of this on the technical side. I'm not going to try pretend to be smart and know it. I don't. There are better people on both YouTube and in watching this video right now. But the point being is there's clearly a level that certain things become significant for others. There was some inverted structure and grind lines that were being broken, but it hasn't pressed on. We've kept setting the grind lines, but they've not pressed on. So there's something holding this up from falling too far. And it's creating the falling wedge. In other words, there's opportunity when the price starts approaching these levels for somebody, and that could lead to a pop to the upside. So the big question is, if Bitcoin tops out on a relative high 2 and sells off, and it's waging a little battle here. We've got it on a 15 minutes, so it looks a bit schizophrenic. Don't get too excited and pumped by the the tick and panic and look for a signal. But you may find that we are close to this being a RH2. If this starts churning and chopping around, a little bit of rally, a little bit of sell-off, rounded top starts forming, it starts to look like it's going for a little bit of a proper down leg, we could find, providing it's not too disorderly, a move up in BCC or BCH, depending on what exchange you're on, while it dips down. And that could be very good news for Bitcoin long run, because out on the 2 hourly again, we could just be getting a nice little dip, and we could be getting a beautiful setup with an amplitude from here right the way down to there. So this sell-off was quite harsh, and we could get that projection in another HVF big structure on a 2 hourly frame. We love big patterns because you can just sit net long in them and they can just pump like beasts. So, you know, down isn't a bad thing. It just sets up new ups, that's all. And ups isn't always a good thing. It just sets up future exhaustion. So you've got to see night and day as the gifts that they are, rather than good and bad price behavior. That's how it works. So one gives to the other. The one hand washes the other and allows for future runs by easing. And so BCCH does seem like there's a bit of protection there. And of course the dollar as the wild card. If people start exiting the fiat, cryptos and Bitcoin particularly has sufficient liquidity for people to run into now. So it starts to become a viable option, alternative currency. So the effect of the dollar will most likely always affect Bitcoin more than any other coin or alt. In other words, people will leave fiat and dollar for Bitcoin because of scale, liquidity, and longevity. It's still the one that's been around the longest. When Bitcoin is strong or reasonable strong, the alts can pump relative to it or be lagging relative to it, but that's a separate assessment. So Bitcoin is kind of the gateway connection between fiat and the alts. And many people have to get Bitcoin first, even if they want to get alts. So there's a temporary boost to Bitcoin in every move. So just bear that in mind. And the goal should be to build your equity in Bitcoin. So you don't want to lose in Bitcoin, because long run Bitcoin should go up unless it's totally dethroned, but it's the benchmark for now. So as long as it's not totally dethroned, your goal should be to build more Bitcoin. Don't always count your wealth in dollars. If you're losing Bitcoin, but because Bitcoin's going up, you're still net making money in dollars, you're destroying value. You're destroying value. And if Bitcoin sells off a lot, but your crypto pot increases in overall Bitcoin scale, you're just making lots of extra Bitcoin that'll make money for you when Bitcoin reverses and starts going back up again. Measure the game in Bitcoin. That's an important point as well. Okay, that's me done. Quite a long clip. Hope it's useful. A little bit of opinion there in for you, and a little bit of the scenarios of what's going on. The first sell is never the beginning of the move. It's never going to sell straight line down like this. There will be maybe a bear flag. There may even be a churn. There could be quite a strong rally. We might even make a marginally higher high, but still shyer than this. Any of those things can still happen. So try avoid selling on a panic sell moment. Just be chilled, and maybe when you get a rally back up to here, you can take a little bit off the table and get into your tether. And play the 2 hourly and the 4 hourly and be sensible about that, rather than getting too hyper excited on the 15 minute. So I dropped to the 15 minute just to demonstrate certain points and patterns. That's a long clip. I'm going to call it a day. It's Francis. Final shout out for the September Trading Metamorphosis program. Real opportunity. 10th and 11th. The structure will change hereafter. So worth getting in on the almost, I would say, the last of this model. And it's going to be awesome. We've got some great guys on board. You can find us on themarketsniper.com. Contact us, go there and do the necessary, get in touch and have a chat, and we can see if it's good for you and you can come on board. All the best, trade well, enjoy the weekend.